So I will discuss the flow of an investigation based on a standard methodology that most fraud auditors apply. And it's also an investigation methodology that we're for the moment formalizing with the Institute of Fraud Auditors in Belgium. So it's a 5-step approach. And I will make it a bit more practical by explain it based on an actual case. So for the case, we are talking about an international construction company. So they have roofing projects with their headquarters in Germany. And they received a whistleblowing alert from someone from the accounting department in Belgium. And it's an alert regarding the Belgian CFO. And there would be some personal enrichment by the Belgian CFO. Some other background information that is available is that the Belgian board of directors, so from the Belgian entity, was composed of the CEO and the CFO. So both of them had powers of attorney to represent the company in Belgium. The international financial reporting towards the group CFO at headquarters was really only project-based, so they had to report on the costs and revenues of a project and the margins of the projects, but they did not at headquarter level have full details on the full accounting system and every single general ledger account. That was something that was not available. And as the Belgian accounting system was a cloud-based solution, with only local user accounts, the group CFO did also not have access to the actual accounting system in Belgium. But next to that, so the general IT infrastructure, for example, like the file server or the mail service, that was managed by the IT manager at headquarter levels. So if we go then to the first step of the investigation methodology, that's actually the identify phase, where we would look at what is the kind of information that we have available, the allegation, the suspicions, the currently available documents. Then you would look who is involved, what might be the potential fraud theory. Is there anything else from an information point of view that we already can gather at this stage? And that is really necessary for us to decide whether or not we want to proceed with an investigation. So for the case, the whistleblower mentioned that the CFO had a very expensive lifestyle, that large cash withdrawals had to be executed by the people from the accounting department at the request of the CFO, and also that there were some invoices that were processed solely by the CFO. Some additional information could be gathered at that stage. So on the one hand, it was one suspicious invoice, so an invoice that was processed solely by the CFO that was intercepted by the whistleblower. And then some background searches were performed on the CFO, where it was discovered that he owed 6 companies next to his management company, with quite some amounts passing through those companies. Whereas, he was normally full-time working for the company, and it was not clear what he would be doing in those 6 other companies. At that level, we didn't have any certainty whether or not the CEO would be involved, because they were working closely together and they were the 2 sole directors in Belgium. So the first fraud theory that you have based on that information is that there might be some fictitious invoices from the related parties of the CFO, and possibly also some theft of cash. So this was sufficient for the German headquarters to decide to proceed with an investigation. And a bit of background information from a legal situation to take into account was the fact that the CFO was engaged through his management company. So there was not an employer-employee relationship. So it was more a contractual relationship. So if we go to the next phase, that's actually the planning phase. In the planning phase, you would see what is our fraud theory and then identify how are we going to investigate that. So what would be the relevant data sources? What are the people that we have to include in this project? Who will perform the investigation, and what is actually our investigation plan? How will we tackle the investigation? So in this case, an external fraud auditor was appointed to perform the investigation. And it was decided to include the group CFO because, yeah, he was responsible for the overall accounting. To include the group COO because he was responsible for the international operations and was more a bit supervising what happened in the Belgian entity from an operational perspective. And then, of course, also group HR and legal as it concerned a potential fraud. So then an investigation plan or memo was drafted where the background was described, what was known to date, and what is the objective. So the objective was to create transparency and identify potential irregularities. And then a description is made of the procedures that are planned. So that was first start with the kickoff interview, then safeguard and collect the data, understand the policies and procedures, certainly because it was mentioned that there was apparently an unusual flow of invoices managed by the CFO. Have a look at the cash transactions, identify the related party transactions with the CFO's companies, see whether there are other additional unusual transactions, review hard copy documents, and then analyze email and computers if that's appropriate at that stage of the interview, and then go for final interviews. So here to mention, it's really important to have a decent investigation plan at that stage, because it will afterwards allow you to demonstrate that you had a decent approach and that you looked at the proportionality of the steps that you're taking when performing the investigation. So the next step is actually initiating your investigation. It's not yet the execution, but the startup phase. Within a startup phase, you typically have some hidden actions, which mainly ensure that you make sure that data will not get lost, that you prepare for stopping any further detrimental actions, and that you make sure that when starting your investigation, everything is formalized and that you can actually, in a decent way, make the decision to start with an investigation. And then you would announce the investigation and perform an interview with the person concerned and really inform the person of that investigation and inform him about his rights during the investigation. So for this case, what were the hidden actions that have been taken? So first of all, a litigation hold was put on the mail server, which means that you activate the litigation hold that will ensure that any mail that is being deleted as from that point in time, that it will seem deleted in the mailbox of the users, but actually a copy of the deleted emails is preserved at the level of the mail server. It was ensured that there were sufficient backups of the mail server, the network folders, and even backups of computers to make sure that if things would get deleted, we could still go back to backups and recover data from those sources. Then everything was prepared that IT would be on standby for the day that the investigation would start, so that they were prepared to block the email accounts of the CEO and maybe also the CEO, that the network access would be blocked, their access badges could be blocked so that they could no longer have access to the buildings. Then as both the CFO and the CEO were directors in Belgium and the only persons that could legally represent the entity in Belgium, the necessary action was performed that the shareholder in Germany could make the formal decision to perform an investigation in Belgium, and that they could prepare for extraordinary board meetings to organize the dismissal of the CFO, and probably the CEO appoints additional directors, and then also inform, for example, the bank that they no longer had any power of attorney. So that's very important that you prepare that and that you actually have a decent approval and a signature that can really allow you to start the investigation within the company. Then subsequently, the on-site announcement of the investigation took place towards the CEO and the CFO. Then interviews were performed with the CFO and the CFO by the fraud auditors and external legal counsel. And then the CFO, well, he informed that indeed he was invoicing from his companies to the company, but that he could explain everything, but that he was willing to cooperate with the investigation. And then at that level, there was a mutual agreement between the company and the CFO to suspend his management agreement during the period in the investigation, and that he promised full cooperation during the investigation. Then the next step is actually the execution of the investigation, where you perform the investigation steps as described in your investigation memo. So we had a look at the cash transactions, and we noticed that there were on a yearly basis 600,000 euros of cash withdrawals that were supported by invoices from foreign companies. So for example, it were even invoices from companies in Africa, whereas the company totally had no activities in Africa at all. And they were paid in cash, which is really strange how you could pay an African company if you don't go over there in cash. Those invoices were also signed for approval by the CEO and the CFO. And there were some expense notes from employees to support the expenses with the cash withdrawals. We identified that from the related parties of the CFO, there were 800,000 euros of invoices on an annual basis, and they were processed through a manual flow. So the standard flow within the company was really based on a PO, and then an incoming invoice was scanned, matched against the PO, and then approved by the accounting department, as well as by the project manager on which budget the invoice would be allocated. But they had a separate flow with an invoice being booked immediately into the accounting system and immediately being paid. But that was a flow that they should only apply for the management fee invoices of the CEO and the CFO, because they wanted to keep that a bit discreet within the company so that not everybody would see that. But the CFO also applied that flow for the invoices from his companies. But we saw that also those invoices had been signed by the CEO for approval. And in that unusual manual invoice flow, we also identified on a yearly basis 300,000 euros of invoices from an interior shop. And actually, the company was quite small from an administrative perspective, so there were not at all goods for that amounts available within the building of that company. So the CFO was cooperating with the investigation and provided some documents. So on the one hand, he had a lot of signed declarations from family members and friends from him that stated that they helped him out because he was very, very busy with services for the company. For example, his 80 years old mother provided a written declaration that she helped out with reviewing legal contracts with suppliers, and that she also helped out with the customization of the ERP system. And there was a bunch of declarations from his family members and friends with similar statements. Then he provided agreements with his companies and the company itself, and all those agreements were also signed by the CEO. And he provided a statement of the owner of the interior shop, who stated that the goods had been ordered by the company and had been delivered at the house of the CEO. So additional interviews were performed with employees, and it appeared that everybody within the company really trusted the CFO, and that they provided him with blank documents with their signature, and that the CFO could use those documents to provide their expense notes. And also the CFO provided blank documents with his signature on it, so that the CFO could prepare his expense notes. Additionally, they also mentioned that their bonuses were made with cash payments, so that actually it were immediately net bonuses without any taxes being paid, and that they were aware that the CFO made a little bit of fake expense notes to support those cash extractions with the blank documents with their signatures that they provided. However, based on what has been reported, those cash bonus payments only amounted to 100,000 euros a year, which could not explain the full amount of 600,000 euro of cash withdrawals on a yearly basis. And everybody mentioned that, yeah, the expert services from the related parties were never delivered. For example, the contracts were really standard and never had to be reviewed. The ERP system was a cloud-based system that they just used off the shelf without any customization. So it seemed that that was all fictitious, and also the invoices from the foreign companies, nobody could explain that those foreign companies would have ever delivered any goods to the company. When looking at the computers, then it appeared that all the invoices from the foreign companies, the expense notes, and also the agreements that were afterwards signed by the CFO existed in a Word format on the computer of the CFO. And we also saw that instructions for the invoices that were afterwards issued by the interior shop, so what should be on the invoices from a description level and also from an amount, those instructions have been sent by the CFO towards the interior shop. So the final phase then of the investigation on the next slide is the closing of the investigation, where you in the closing phase would validate your findings, so to see that everything is supporting by documents that prove what you're stating in your report. Then you draft a first version of the report, and then at that stage you would present your observations to the person concerned during a final interview and give him the final opportunity to provide feedback, additional explanations, and maybe additional documentations, and that you process that into your final report. Then assess what actions might be taken, for example, dismissal or a criminal complaint. Finally send your report to bodies and persons authorized to make decisions, disclose to law enforcement or external stakeholders if relevant, and then archive everything. So very quickly, in this case, the CFO in the final interview kept with his previous statement, so that everything has been delivered, actually, that his family members did provide services, that the documents were signed by the CEO, that blank documents with signatures never delivered, and that the CFO had seen everything that he signed, and that he had the documents on his computer, that it could be explained that it was just because he was helping out with preparing documents, or that he first did receive invoices in a Word format by email and then printed them out. So this has been added as explanations or statements to the final report, but still based on the various explanations from the employee and what was found on the computer, the headquarters decided to terminate the agreement with the CFO based on grounds of fraud. A seizure of the assets of the CFO has been initiated and executed, and a criminal complaint has been filed. So after that, the police also started with an investigation with our report as a starting point. And during a house search at the house of the CFO, they found some blank documents with the signatures of the CEO and employees. So, however, the CFO mentioned that they did not exist, but it was found at his house. Large cash amounts were found at his house, so also supporting the suspicions that actually the cash transactions, cash withdrawals went to the CFO itself. Then over the years, large accumulated cash amounts had been deposited on the bank account of the CFO. And during interrogations with the police, when it became clear that it was very serious and that there was a formal investigation, his family and friends withdrawn their statements that they performed services and confessed that they have just written those statements at the request of the CFO, but that it was completely fictitious. Then the owner of the interior shop confessed that actually he had a lot of black money and that the invoicing was some kind of money laundering scheme. So invoices were issued to the company. They were paid with bank withdrawal, bank transfers. So it was really then official money towards the interior shop, and his black cash was then transferred in cash to the CFO. And the foreign companies also confirmed that the invoices were fictitious. So it was very clear that there was a lot of fictitious invoices with wire transfers to the companies of the CFO, and a lot of cash withdrawals that immediately went to the CFO.